A lot of factors impacting the equity market movement today. First, the backdrop in which we started off trade, wherein many brokerages were actually raising the red flags with regards to the stretch valuations for India markets. So CLSA, for instance, Alexander Redmond from CLSA says that he advises lowering the exposure to India within the APAC segment, saying that high energy costs, peak margins, as well as stimulus withdrawal are going to be key concerns for the India markets going forward. And also stating that rich valuations are a high probability for earnings disappointment going forward, and that's what is eroding the external position and weak credit growth, which are key for India markets going forward from here, which is why they see a downward risk coming into margin compression when it comes to India Inc. Similar was the word of caution really coming in from Macquarie as well today. While they do believe constructive on the long-term backdrop for India equities, in the near term they say that earnings downgrade risk as well as stretch valuations are key causes of concern, which could pose perhaps while India is trading at a premium to emerging markets, it does have a potential downgrade risk coming in. So that said, for our equity markets today, it was no different a movement. You did see we started off mildly in the positive, about a 0.5% uptick or so. In fact, we did have a touch and go moment with that 18,200 print, and soon after we gave up those gains, finally closing in absolutely flat. The good thing is that we managed to close in above the base price of Friday when we had that excellent trading session. 18,100 stood pat. 18,131 is where we've shut shop for the day. For the broader market as well, it was a similar situation, flickered in and out of the green to the red and finally closed in absolutely even Steven for itself. 94 stocks to the advances with 95 to the declines within the F&O segment. Sectorally, while automobiles closed flat today, banking was down. Cement as well was a laggard, saw some profit taking after a good last fortnight. Chemicals, of course, sprung up very smartly, as did pharma, which was one of the biggest price performers today. Telecom, metals, financials all weighed heavy on the indexes today, while FMCG as well, along with power and realty to some degree, did post some great gains. So let's talk about the movers then. Within pharmaceuticals, you had the ancillaries hold out very well. Three managements of top hospital stocks in the country came out today and told us that they are seeing their non-COVID business jump up quite significantly. You saw that in the sequential as well as the year-on-year performance for Apollo Hospitals, for instance. And this was a big mover in trade today, held out by about 9.25% after touching an intraday peak of 10% today. Metropolis, 8.5% higher. Laurus Labs was a good mover today. Syngene held out very well. And similar was the price action across some of the large cap pharma names as well. So Divi's Labs, for instance, was holding out very well, as was Cipla, with a 2% gain coming in for itself today. That said, the one bleak pocket today was definitely metals, irrespective of an excellent performance from Tata Steel and Hindalco, along with JSW Steel. These were significant draggers in today's trading session. But that said, there were some broader market participants like a Manappuram Finance as well, which lost about almost 10% today. Mahindra Finance as well was a loser to the tune of about 6%. FSL, JK Cement, Coal India, along with Granules were also some of the drag points in today's trading session. FMCG as the pocket held out quite smartly. So after the margin compression that you've seen on their earnings because of the raw material cost pressures, Nestle, Britannia, ITC were all significant movers in today's session. In fact, ITC held out by a solid 4% in trade today. You also had a new listing. You had Policy Bazaar list today, the parent company that is, listed with an issue with a premium of about 17.5% roughly to its issue price, and closed in as well with a premium itself. But of course, next week, or rather this week, later on, it's a truncated week, remember, you've got Paytm set to debut on the exchanges. So let's see how the market holds on from here. Most technical experts, though, do believe that the market is going to get into a bit of a consolidation mode.